What are federal versus state estimated taxes? Imagine you're running a small business or earning income that isn't taxed automatically. You might wonder how to stay on top of your tax payments without surprises at the end of the year. That's where estimated taxes come into play. They are payments made throughout the year to cover your income tax and other taxes you owe. But there's a big difference between what you pay to the federal government and what you pay to your state. Federal estimated taxes are paid directly to the Internal Revenue Service. If you are self-employed, a sole proprietor, or have income from investments, you usually need to pay federal estimated taxes if you expect to owe more than $1,000 in taxes for the year. These payments are made quarterly, on April 15th, June 15th, September 15th, and January 15th of the following year. You use Form 1042S to figure out how much to pay. Missing these deadlines can lead to penalties, so it's important to stay on top of them. State estimated taxes work similarly but are paid to your state's tax authority. The rules, forms, and deadlines vary from state to state. Some states requiring quarterly payments if your estimated tax liability exceeds a certain amount, often around $100 or more. These payments help you stay current on your state income taxes, especially if your income isn't taxed at the source. For example, if you operate a business in a state with income tax, you might need to make these payments to avoid penalties or interest for underpayment. The key difference is where the money goes. Federal estimated taxes cover your federal income tax and self-employment tax, which includes Social Security and Medicare taxes for self-employed people. State estimated taxes are for your state income tax, and the rates and rules can be very different depending on where you live. For small business owners, it's essential to keep track of both sets of payments separately. You need to estimate your income and expenses accurately to avoid paying too much or too little. Using the correct forms, like Form 1042S for federal and the equivalent for your state, makes this process easier. Understanding the difference between federal and state estimated taxes helps you plan your cash flow better. Making timely payments ensures you stay compliant and avoid penalties. It's all about staying organized and knowing your obligations so your business runs smoothly without tax surprises at the end of the year.